talk now about interest rates, mortgage interest rates in the UK and what is happening. This is a really big topic as it relates to UK property investing. Interest rates, mortgage interest rates are really what's driving the housing market at the moment in terms of affordability, in terms of demand, how houses are selling, how quickly houses are selling, and how prices are doing. So let me give you a caveat first, okay? I'm going to make some sort of predictions and commentaries on what's happening, what I think is going to happen. But if the last 4 years have taught us anything, and I'm putting, COVID in that bucket, the war in Russia, there's stuff going on in the Middle East right now, the changing of our prime ministers 3 times, the economy blowing up after Uncle Kwasi and Auntie Liz, okay, you just don't know what's going to happen. So it just seems like the world, I don't know if you agree with me, but I don't know, the last 4 years in the world, on earth in general, have just been mad. I don't think I've witnessed, I can't remember a period of time where just so much crazy stuff has happened in the world. But anyway, I digress, okay? But between last year and now, interest rates have done a madness. And you can see on screen right now the history of interest rates from just a year and a half ago, mid 2022, round about 1%. And in the space of a year and a half, just 18 months, we're at just over 5%, right? So there has been just absolute chaos as it relates to interest rates in the economy. Why is that? Well, it's really down to inflation. And if you remember, the inflation issue kicked off really during COVID when supply chains were disrupted. People were locked down. The traditional supply paths, there were like travel bans and all of this kind of stuff. It started then. And then don't know if you remember, there was that fuel crisis. And then you roll forwards, you had the war in Russia and Ukraine, and our supply of gas and oil and energy from that part of the world was affected. And what that did is just put sustained pressure on prices, okay? And essentially over the last year and a half, but longer than that actually, inflation has just done that, and the cost of living. You tell me, right? Tell me how much more expensive your groceries when you go to Aldi, Tesco, Sainsbury's, other supermarkets are available, wherever you shop. Tell me how much more expensive your basket of groceries is now compared to 2 years ago. It's actually insane when you look at it. I come back from Sainsbury's, my local Sainsbury's, with a basket of goods, and there's probably about 5 items in there, and I'm paying £10-15. It's madness. And that's just groceries. You've also got the costs of your, utilities, your gas, your electricity, etc., etc. Now, what does the Bank of England do when inflation is above their desired threshold? They increase interest rates. Why is that? It's because most people and businesses have some sort of lending in place, whether it's loans or a mortgage, credit cards, etc. The costs of repaying that go up, so you have less money in your pocket at the end of each month, and you start to bring your spending down. And the idea is that brings overall downward pressure on the price of goods and services. So that inflation, the idea is that inflation starts to come down. And we've seen it, okay, in real life in the economy, okay? Inflation has come down significantly. I think it's halved over the last 12 months in line with these massive Bank of England base rate increases that they've put in place. So it does work, okay? That system works. It is brutal on everyday people like you and me and businesses, but it does work. And in line with that, let's have a quick look at this article from the Times Money Mentor and take a look at what's happened to mortgage rates, average 2-year and 5-year fixed rate mortgage rates since mid last year. So it's only the last 6 months. 23rd of June, the average went up to 6.19% for the average 2-year fixed and 5.83% for the average 5-year fixed. And then as you go through the year, there was slight rises in July, but as you get into really August onwards, there's like sustained drops. And at the bottom there, January of this year, we've gone from 6.19% and 5.83% down to 5.59% and 5.22%. So as I was saying, those base rate increases have worked to tackle inflation, and now the Bank of England have started to keep base rate at its current level. I think it's just over 5%. They haven't dropped it yet, but even though, this is the interesting part, even though they haven't dropped base rate yet, interest rates on mortgages and other types of lending have started to drop already. Why is that? It's because they predict that over the coming months, over the coming year, the Bank of England will start to drop base rates. So this is essentially their prediction on the direction of the economy. So that's good for us, good for me, good for you, even if you're renting, because that means your landlord's interest rates on their mortgages are going down. So maybe they'll reduce your rent, maybe. But you, at the very least, you expect them not to increase the rent further, because I know rent increases have been really hard as well in the UK, especially here in London, cities like Manchester, etc. And then lastly, guys, I wanted to show you how what we're seeing today in terms of these interest rate increases, because some of you might be, you know, Gen Zs and have no idea of what interest rates were like prior to 2008 when you kind of started to pay attention. These rates today in the long-term context aren't that high. You know, this was about average, okay, prior to 2008 when the crash happened. And as you can see on screen to my left here, prior to 2010, you know, going back to 2006 and beyond, rates were, you know, above 5%, even over 6% at times. That's what rates were at. Really bad English, that's what rates were at. But the key difference is that during those times in the lead up to 2008, before the global economy crashed, the UK economy and the global economy was in a boom phase. It was very prosperous, yeah? House prices were doing madness. Why is that? A big part of it was the availability of credit. People were giving away, and get this, 100 and 110% mortgages. So basically, if you're buying a property, you don't need any deposit.
Jesus Christ.
They were giving you the money. Sometimes they were giving you over and above the money. So they're giving you the money for the cost of the property plus an extra 10, 20K to do it up or go spend somewhere. It was a crazy time. And I wish I'd have gotten in on property then when I could have got 110% mortgage. Or maybe it would have been a bad idea because, you know, when the crash happened, I might have gone down along with that. But that's what was happening. Okay, people were optimistic about the economy, about their future plans, about their job prospects. Wages were, you know, doing all right. They were rising fairly steadily. So the shackles were off. Money was being chucked out of the door from banks. People were buying property, buying property, buying property. Developers started to build property, build property, build property. But eventually, of course, the bubble burst. People were borrowing money that they actually couldn't afford. And I'm giving you now kind of economic history lesson. But it's worth knowing this, okay? People borrowed money that they couldn't afford, and then when the economy started to struggle a bit and seams started to crack and people started to lose their jobs, it all fell down, okay? It all fell down. The property market went completely down the toilet, as did the global economy. And since then, what governments have done is brought in more strict measures about affordability. So now the price of the property can't be more than, I think it's 4.25 or 4.5 times your salary, okay, your annual salary, because above that, they're saying that, you know, you can't afford this. And if rates go up, as they have done over the last 18 months, you could be in trouble. You might lose your house. They don't want the whole economy, the global economy, to fall down again. So there's a lot more rules around affordability when it comes to mortgage lending. What do I think is going to happen in terms of the future and the future direction for mortgage rates? As we saw in the Times article and those other graphs that I showed you, I think mortgage rates are going to continue to come down this year. Of course, the caveat being that there's not another global random virus from a lab in the middle of China that takes a world by storm, that there's not another war, even though all of these countries are moving kind of mad at the moment, or anything else that could happen. You know, aliens land. I don't know at this stage anything could happen, but I do think rates, if none of that happens, will continue to go down. Thank you for watching. This year I'm making a video every month to answer any questions that you have for me. So whether you want to know whether you should invest in a limited company or in your own name, whether you should buy a flat or a house, what is the best way to get started in property, or who my barber is, just let me know. You can ask me in the comment section below, on Instagram, on TikTok, and I'll make a video dedicated to your questions. Like and subscribe, and thanks for watching.